Boston Fed President Collins speaking yesterday at a community banking conference, taking a cautious tone around the path forward for rate cuts, a view that is echoed by our next guest. Joining us here at Post 9 this morning is former Minneapolis Fed President Gary Stern. Gary.
So that is the consensus ringing across the markets right now. The Federal Reserve, or most of them, are siding on the air of no cuts at the next meeting. So how's this going to affect the markets? How's this going to affect mortgage rates? Well, my goal each day when I come in here is to help explain to you guys what the heck's going on with those and the whys behind it. So today we want to talk inflation. Why is it so important? Well, the jobs market we're going to be monitoring, but it's inflation that I want you guys to understand how it compounds on itself. Because if you're complaining about, egg prices or chicken prices or even bread prices, they're never going to go back down to where they were. Why? Well, that's what we're going to talk about in today's video, folks. So my name is Dan Frio. I come out each day to explain to you guys what's going on with those and the whys behind it. The reason I'm doing this is I'm a mortgage loan officer. I'm licensed in all 50 states as well as Puerto Rico. And if you're out there looking to buy or refinance, I'd love to help. My slogan here is one application, one credit pool. We're going to compare your loan with over 30 different lenders. How do we do that? I'll give you that information at the end of this video. Let's get to today's news. So let's go back to the Federal Reserve, or the former Fed Reserve official, see what his take is on all this. Then I'm going to help explain to you guys what inflation is and why it is worse than you think. Let's get over to it.
It's great to have you back. Good morning. So Collins, Daly, Bostic, sort of this school that maybe it's good to slow down?
Yes, and I would agree with that. I don't think, first of all, I don't think there's a compelling rationale to lower rates right away. The Fed meets frequently enough that if there's some surprises or circumstances change, they can always act at the next meeting if that's appropriate. Given where the economy is, the way it's performing, and the stubbornness of inflation in the 2.5 to 3 or 3+ range, it seems to me it's difficult to build a rationale, to build a case for lowering rates at this point.
And it doesn't sound like you think the resumption of data is going to change that trajectory.
I'd be surprised if it did because, the data have been reasonably accurate for the state of the economy. Employment gains have continued, but they've been modest. Inflation, as I already commented, has been stubborn. As far as I can tell, consumer spending has, on average, held up. I'd be surprised if in the next month or 2 or 3, we got a very different picture from the data. It's important to bear in mind some of the series are kind of noisy. And for that reason, you don't want to put a lot of emphasis on any one observation. It's always a good idea to not only do the analysis, but to smooth out the readings you get month after month and see if the trajectory of the economy is changing.
So that's what his response is, and that's now what the majority of the members of the Fed, I think, other than maybe 3 or 4 of them, are looking at. Would I agree or disagree? Well, let me explain to you guys what inflation is, and then you come back and tell me, yeah, we really need to keep a lid on inflation. So let's get over to it. First thing I want to show you guys is if you're a homeowner right now, I created a tool. And the reason why I did this is if you're looking to refinance, do you see rates keep going up and down and up and down? And you're like, Dan, I keep missing it. What if there was a tool that you can actually put in your information, and when mortgage rates hit where you want it to be, you'll be contacted. We'll go through the numbers and see if it makes sense. Well, I created just that for you. Go over to the rateupdate.com and click the RateWatch tool right through there, and that is exactly what it does. So let's get over to the news and what we got today. So let's focus in on mortgage rates. Where are they going to go today? Well, the stock market's getting hammered today. It was down 300, 400, 500 yesterday, and it looks like it's going to take it on the chin again today. But let's get over to what the Federal Reserve is going to do, most likely in 26 days. So the Federal Reserve is going to meet. They're going to look at the financial numbers. They're going to look at the inflation numbers. They're going to look at the jobs report, and they're going to tell us what they're going to do. I'm not going to go there just yet. I want you guys to understand how inflation works. So this is the price of a product that was $100 back in 2020, and I want to explain to you why it's all the way up here now. Even with inflation, really it was high. It's starting to come back down, but are we ever going to see prices back down here again? No. Here's why. So here's how inflation works. Let's go through here. The inflation in 2020 was 1.4%. That was the norm for years and years and years. It was under 2%. Then all of a sudden, 2021, we had 7%. This was the highest that I've seen in decades. And then the next year it was up 6.5, and you're saying, okay, that's bad. But I think a lot of people think it's 6.5%, but then it goes back down. Like it goes back down to zero. No, here's how it works. So in 2020, all the way to 2024, it went up 7%, 6%, 3%, 2%. You're like, okay, and it went up a little bit. No, it went up a lot. Let's go down to this chart right through here. Here's what I want you to understand. Here's that product right here. Okay. So in the first year, if inflation went up 7%, the price is now here. Okay. Well, the following year, it went up another 6 or 6.5%. So it didn't go back down to here. It compounded on itself. Now that same price of that product is up to here. Okay, so then the next year, inflation started to cool a little bit. Well, it didn't bring it back down to here. It actually brought the numbers to here. You see what I mean? It just keeps adding on itself. This is also why a lot of people, when they say, okay, housing is going to crash, well, just on the inflation front, housing should go up maybe 2-3% a year. So this is how products work. Okay, so that's why the Fed's saying we got to do something, because we can handle 1 or 2% a year, but look how far we've gone over these years. It's way up there, and that's why, or how inflation works. So if you're thinking, where it's going to go from here, that's why the Federal Reserve has most emphasis. It should have most emphasis on it at this time, and this thing's right through here. So that's how it all works. So let's get over to this and see how the markets are faring today. So at least I can give you some output with no financial data out today, because I think we're going to start getting the financial news next week, so I can help you a little bit further there. But let's get over to here. Let's go through what the bond market's doing. So the bond market that I follow each day is up 11 ticks. So this is a mortgage bond. You probably don't have access to it. So if you're a mortgage loan officer, you're a realtor, you're even a consumer looking to refinance or buy, click over there and subscribe. So every day you can watch me for about 5 or 10 minutes. I'll explain to you guys exactly what's going on with bonds and mortgage rates. So here's how this works, but I'll go over to the 10-year Treasury because you'll have access to that every day, 24 hours, and I'll explain to you how that works. So here's the mortgage bond. It says right at the top, the MBS. All you have to understand is the price up there. The price is up 11 ticks. That means price of a bond is going up. When the price of a bond goes up, yields come down. Well, this is a mortgage bond. So if you have mortgage bond yields coming down, well, that means mortgage rates are going to come down. So let's flip-flop over to the 10-year Treasury, because you'll have access to this all the time. So this works a different way. This is actually going to give you the yield, so just follow it. If the yield on the 10-year Treasury is down, most likely mortgage rates are going to be down. That's the easiest way for me to explain it to you. So when we come out each day is I go over where mortgage rates are, where they're going, and the whys behind it. We usually focus in on the financials, what the Federal Reserve is going to do, and anything that's going to affect the bond market. And that's what we do on a daily basis. With really no data out, I want you to understand also mortgage rates and how they work. So let's scan over to my chart once again. If we go up to the top right through here, here's what I want you to understand. When you're looking for 30-year mortgage rates, because maybe you're looking to buy or you're maybe looking to build. If you are, go over to my website real quick. We also have tools for home people that are looking to buy a home. So you might want to schedule a consultation with us. Let's go over your budget. What do you fit for? What's the maximum loan price you can get? Maybe what is your credit scores? You might be wrong. Your credit scores might be lower than you think. Well, then what kind of program do you fit into? Maybe they're a little bit better. Okay, don't disqualify yourself. So the best advice I can ask of you, reach out to us. Folks, I've been doing this for over 35 years. I'm licensed in all 50 states as well as Puerto Rico. I'd love to work with you. So use my 35 years of experience and also my slogan, which is one application, one credit pool. We're going to compare your loan with over 30 different lenders. Let's get back to the data, and then I'll come back to me here in a second. So my thoughts on this is mortgage rates are going to just be kind of popping around. I predicted mortgage rates in Q4 this year at 5.99 to 6.375. They keep hitting that 6.34 and bouncing off of that. So that's my high tier for the mark. I'm not changing it. I'm not even going to change it for the Fed meeting, because I think even in Q1, we're going to be kind of stuck at these rates. Now, what's coming down the pike? There's a lot of things coming down the pike. The Federal Reserve will have a whole new look next year because we have Federal Reserve Chairman Powell. He's stepping down because his term's over. And then we have one other person. His name is Bostic. He's actually retiring early. So the Trump administration is going to be able to load up the Federal Reserve. So I think next year is going to be a little different. You want to find my thoughts on that? You want to find my thoughts on what's happening next week? Join me today at 1 o'clock. What I'm going to do is I'm going to recap today's, this week's information, and then what I'm going to give you my thoughts for next week. And is there any financial news that's coming down the pike? we're going to go over that as well, because my whole goal each day when you come in here is to help explain to you guys what the heck's going on with those and the whys behind it. So folks, like I said, my name is Dan Frio. Let me explain to you guys what we do. So our slogan is one application, one credit pool. We're going to compare your loan with over 30 different lenders. How do we do it? Well, think of us as like a broker. We're set up with all these other banks, lenders, and credit unions, but we're actually a bank. So here at the bank, we have options and we have of the availability of over 33 other lenders to offer you their rates, their programs, even their perks. They might have down payment assistance programs and things like that that might help you. We also specialize in reverse mortgages and actually investor loans. So if you're looking for a DSCR loan, maybe a lease option loan, things like that, reach out to us. We would love to help. So folks, my name is Dan Frio. Please join me today at 1 o'clock Eastern time, where we're going to review this week's data on what's going on with these and what affected these for the week. And then I'm going to show you the data that's coming down the pike next week and how those might be affecting these over through here. So thanks for watching. Please don't forget to subscribe down below. Join me today at 1 o'clock to figure out what happened this week and what's down the pike next week. Especially if you're a realtor or loan officer, you might be able to explain this to your clients over the weekend. So join me today at 1.